Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in and we continue to see massive price cuts around the nation, on average of 6% from peak in June. Again, 6% from peak in June. But what's really important to understand is certain metro areas will crash and are in worse situations than other metro areas. So, for example, we are now introducing our third metro area with year-over-year price decline, which is Honolulu, Hawaii. So today we're going to unpack that data. We're going to access a Redfin article, and then we're going to look at a few charts that essentially visualize demand, pricing, and affordability. And the Redfin article that we're going to dig into is titled Housing Market Update. Typical home now sells for less than asking price. And remember, you guys, I am not a financial advisor, even though my bio is as a realtor, loan officer, and instructor in all things real estate in Texas. This is just my personal YouTube channel. Help me push my message. Help me with the algorithm. Please like this video, subscribe if you haven't, comment below. Let's get started in the article right now. All right, guys, this should be a really good video. We're going to take a look at a lot of data, but we're going to read this first part of the article right here. The average home sold for less than its list price for the first time in over 17 months. During the 4-week period ending August 28th, as the housing market cool down continued. Every month since March of 2021 has been an average sale to list ratio of over 100%, meaning that the average home has sold for more than the final asking price after all price drops. This comes as the share of listings with a price drop has finally begun to plateau. Now, I don't know that it's plateaued, you guys. I just don't know that it's plateaued. Despite the easing in home prices, demand from home buyers is still chilled. Mortgage purchase applications and pending sales both saw large declines from a year ago. Thanks in large part to another spike in mortgage rates, which rose to 5.66%, their highest level since June. Home sellers are also reluctant to step into the market. New listings and total inventory of homes for sale saw large declines as well. While the cooldown appears to be tapering off, there are signs that there is more room for the market to ease. The post-Labor Day slowdown will likely be a little more intense this year than in previous years when the market was super tight. Expect homes to linger on the market, which may lead to another small uptick in the share of sellers lowering their prices. Home buyers' budgets are increasingly stretched thin by rising rates and ongoing inflation. So sellers need to make their homes and their prices attractive to get buyers' attention during this busy time of year. So do you guys think this housing market cool down is plateauing? Do you guys think that? Because I don't think that. Have you seen the 10-year? The 10-year is absolutely surging. Interest rates are going up. If anything, I think the slowdown is going to speed up. But do me a favor, comment below. Let me know if you think the cool down or the crash or whatever is slowing down, or do you think it's picking up? Remember, we're in September when the Federal Reserve apparently is going to double their asset selling program to roughly $95 billion. Not to mention the stock market is an absolute bloodbath right now. But regardless, let's take a look at the leading indicators of Redfin right now. All right, guys, so I'm not going to read this word for word. I'm just going to kind of go down this list, and we're going to take a look at Honolulu and the other two metro areas that we've been watching with year-over-year price decline. Now, let's start at interest rates. So obviously, interest rates rose to about 5.66. And here's the thing with the 5.66 average. You can basically add a half a point on top of that for normal people that go to get a mortgage. So in reality, most people have an interest rate at least half a point higher than that. So keep that in mind. Now, also online sales. Online sales are down 26% year over year. Now, demand is down 16% year over year. Now, I think that's more, but it says here demand is down, according to Redfin, 16% year over year. Now, touring is down year over year. 9 plus 11, touring is down 20% year over year. Mortgage purchase applications are down year over year, 23%. So that is a lot of cool down. That is a lot of changes. So I really want you guys to pay attention to this as well. Essentially, prices have declined 6% from the record high. So again, we are down 6% from the peak in June on a national average scale. So -6%. I need -15% for my 2 years of renting to be worth it. But not only that, at least I get a whole bunch more inventory to choose from. But look at this. So we're introducing a new metro area. Let me read this word for word. We have 3 metro areas saw a year-over-year decline in their median home sales price. Honolulu, Hawaii. Welcome, Honolulu, Hawaii. It's nice to have you. Prices fell to 3.6%. So it wasn't a small decrease year over year, right? It wasn't like 1% or 0.5%. It was 3.6%. That's massive. Also, Oakland has worse price fall as well of 3%. San Francisco at 3.7%. That's all going up. And those are year over year comparisons. And a lot of people hold on to those year over year comparisons. So you guys can essentially see that things are getting worse. I believe we're at a tipping point overall in the nation, and things are about to collapse. But I believe in some metro areas, they are already past that tipping point as far as price decline, and it's going to start being noticeably going out of control. But let's go ahead and visualize some of this data right now. I want you guys to check out these graphs. Take a look. So here's our first chart, you guys. This is the median sales price. Now, as you guys can see, it has been going down. Now, it looks like there's a small plateau here, but you guys know we need a little bit more data to show a trend, but this is what they're holding on to, saying it's plateaued. So if this number starts going down, they're wrong, right? But this is this is it. That's, a barely plateaued at all. We don't even know if that's a trend. But overall, you guys, the median sales price is trending downward. Now take a look at the next graph. This is the median asking price. Now, as you can see, again, we peaked in May. It's still trending downwards. I don't see any plateau right here. I don't see this going up despite the over optimism a little bit in the article. This again is trending downward. So we want to see this trend downward. We want to see it under 2021 levels at least. Take a look at the next graph. Now here's essentially the affordability chart. It's not an actually affordability chart, but it's home buyers' mortgage payments. And as you can see, it went up here and it went up again last week. Now, I suspect this is going to continue to go up. I think it's going to go up sharply. And again, that's because we're in September now. The Federal Reserve is probably going to hike their federal funds rate 75 basis points and also double their asset selling program to $95 billion, which again is going to put pressure on mortgage rates. The higher the rate, generally the home buyer payments is going to go up unless it's offset by prices lowering, which is exactly what we're starting to see and we want to continue to see. Take a look at the next chart. Now, the next chart is Redfin's home buyer demand index. Now, the red line is 2022. So the red line is this year. Now, as you can see, home buyer demand is almost under 2020 levels, which is represented in gray. It's not under it yet, but it's barely above it. So I'm going to tell you guys right now, we're going to see this crash. Now that we're going into fall and winter, it's only a matter of time before we see this well under the gray line. Mark my words on that. I'm a little surprised we haven't seen that yet, but this is going to start plummeting downwards. And here's the good thing, you guys. I link all of this information in my description so you guys can literally go to Redfin, bookmark these articles, and follow the data yourself. But what I really want you to do is follow this type of data in your own local housing market, because all of this data is hyper local, right? And you want to really apply it to the area that you want to purchase your primary residence in. So overall, you guys, I do think some markets are already past the tipping point, but on average as a nation, I think we're at our tipping point as far as prices. I think that tipping point is about to crumble. I think home prices are going to decline sharply. I think it's going to buckle, and the fear of missing out is really not on media like it's fixing to be. And we still don't have a confirmed recession. They should have just confirmed it so we could have got it over with. Again, they're holding on to unrealistic unemployment numbers. We should have really low unemployment numbers because of all the money that was pumped into the economy and PPP. So there's high demand for labor, but that is going to get crippled very quickly. So again, you guys, keep your eye on that. Keep watching the data, keep formulating your opinions, and calm down, let the dust settle, and let's see what's about to happen together. Now, I really hope you guys got value from this video. And if you're out there investing in real estate, I wish you luck and I hope you win.